How did J.P. Morgan stop the panic of 1907? Imagine a financial storm so fierce it threatens to sink the entire economy. That was exactly what happened in October of 1907. The stock market was crashing, banks were failing, and trust was evaporating fast. The crisis started when a copper mining company called United Copper was targeted by a speculator named F. Augustus Hines. His attempt to corner the copper market failed, causing chaos in the financial world. Banks and trust companies, which held little cash and relied heavily on confidence, began to run out of money. People rushed to withdraw their savings, and the banking system teetered on collapse. Back then, the United States did not have a central bank to step in during times like these. This meant there was no institution to provide emergency funds or stabilize the system. Instead, it was a patchwork of private banks and trust companies vulnerable to panic. The situation grew worse as more banks failed, and the stock market plunged further. It looked like the entire economy might fall into a deep depression. Then, a man named J.P. Morgan stepped into the picture. He was one of the most powerful bankers of the time. Morgan understood that restoring confidence was the key to stopping the chaos. His first move was to gather large sums of money from other wealthy bankers and industrialists. He knew that if enough of them pooled their resources, they could support the failing banks and prevent a total collapse. Morgan then reached out to his contacts and encouraged them to work together. He coordinated a collective effort to provide liquidity to the banking system. This was a major step because, without a central bank, only private cooperation could stabilize the situation. Morgan also took direct action to save some of the most important financial institutions. One of his key moves was to help save a brokerage firm called Moore & Schley. The firm was in trouble, and Morgan devised a plan to sell a steel company it owned to U.S. Steel, a company in which Morgan had a big stake. This sale helped shore up the brokerage and prevented further market decline. To make this deal happen, Morgan negotiated with President Theodore Roosevelt. He secured approval for the sale of the steel company, even though it raised antitrust concerns. This deal was crucial because it reassured the markets that the financial system was being supported from within. Morgan's leadership and quick actions helped halt the panic and restore some stability. While the crisis was not over immediately, Morgan's efforts prevented a total collapse of the banking system. His actions showed how important individual leadership could be during a financial crisis. The panic of 1907 also revealed the need for a central banking system, which eventually led to the creation of the Federal Reserve System in 1913. This story reminds us that even in the worst times, decisive actions by key individuals can make a huge difference. J.P. Morgan's role in stopping the panic highlights how leadership and cooperation are vital during major economic disruptions.